Hello guys, welcome to the very first in-depth bull theory technical analysis video. We have a lot to get through today, but before we get started, I just want to remind you guys to subscribe to our Patreon where you'll get live entries and exits, short form video breakdowns, private Discord access, and a weekly economic report. Also, there is an affiliate link in my description where you can get on Robinhood where you can get up to $200 in free stock. Sign up today and you'll be able to get Apple, Microsoft, Nvidia, Google, Amazon. So without further ado, let's just jump right in. So what I think is very important to do as a new trader and investor is to understand the history of the financial markets as a whole, right? So not just the last 4 years, not just the last 10 years, not just the last 20 years. You have to understand exactly how we got here, okay? Exactly how we got here. So the Dow Jones began trading in 1896, and you can clearly see that this is an uptrend, guys. And within this uptrend, there are corrections. You can clearly see 1929, the 1970s, this is more of a sideways correction, the 2000s bubble, 2008, and you get where we are today. So we've had about 1, 2, 3, 4 major cycle corrections within this time frame, okay? So the reason why I'm showing you guys this and the reason why it's very important as a new investor and a new trader is to understand the market is generally going to go up over time because not only is our GDP going up over time, but the fiat currency we're using to price goods and services is going down over time. Okay, so those are the two reasons why you see this chart. Ever since 1896, the last 100, almost 150 years has been straight up, guys. Up and to the right. So most people misunderstand this. They think to themselves, there's going to be a crash imminent. There's going to be a 2008 style bubble crash. There's going to be 2000s bubble crash, okay? But it's actually a lot more rare than what people would make it out to be. Because I just showed you guys, there's been 4 major corrections within this 150-year time frame. 4. And if you want to get the exact amount of time, I can actually measure, right? I'll show you guys. It's been exactly 518 candlesticks, okay? So over all this trading price action, over 518 bars, there has been 4 major corrections. So it's very important to understand this as a new investor and trader that the market generally goes up. It's not down. It's not sideways. Okay, it's not going down. It's definitely not going sideways. It's going up. So I want to show you guys something that's called the 18.6-year cycle, which I believe has been driving our financial markets for the last 100 years. And so you can clearly see there is a pattern on this chart. You have a 7 to 10 year upswing, followed by a downturn, 2 to 3 years. Then you have a 7 to 10 year upswing. Okay, and you notice on these two swings that the first swing is actually less steep than the second swing. Okay. The 18.6-year cycle itself is within a broader cycle, which is the 100-year cycle. But I actually want to just show you the 18.6-year cycle because it's going to be easier to track over time. And I'm going to be teaching you guys this slowly throughout our YouTube channel. And I'm going to be explaining it more in depth. But for now, this is all you need to know is that you have a 7 to 10-year period of upswing, followed by 2 to 3, 4 years maybe of downswing, followed by another 7 to 10 years of an upswing. Okay. And so if you overlay this on the Dow Jones, you can clearly see this 18.6-year cycle playing out, okay? So, example, 1900s. From the 1900s, let's just take it from 54.39. 7 years later, prices are higher. 1906 ends at 103. What happens after this subsequently? You actually have a correction that was about 2 years. It ended in 1908. Another example, 1921 to 1929. You can clearly see there was a this was more of 8 years, but this was a 7 to 10 year price swing up. What happened? Swing down. We all know what happened in 1929. This has been taught in history books. This has been taught in every single financial class that you have probably studied, in every single book, because it was a pivotal point in our financial system. Okay, so you can clearly see this pattern. The 18.6-year cycle has been driving this market for the last 150 years. And I want to explain this to you guys because a lot of times people don't understand why exactly people trade and they invest and they buy Apple stock and they buy Tesla and they buy Bitcoin. Yes, it is because it's a new technology, and yes, it is because it's great technology. I would venture to say that the four staples of investing over this course of time has always been technology, industrials, gold, and real estate. So the fact that Bitcoin is uptrending like this, it doesn't surprise me because it's technology, okay? Cardano's technology, Ethereum is technology. I am not surprised that we're getting these large upswings in the price. But people get confused as to why we even invest in the first place. We invest because the financial system as we know it is catered to assets. It's catered to assets. If you told me that you were going to put $10 million into your bank account and let it sit for 20 years, I would call you somewhat of a uninformed person, because you can clearly see that 20-year price swings are what make and break millionaires. 20-year price swings are what make billionaires. So if you miss out on a 20-year price swing, then you have completely and utterly destroyed your purchasing power. And so this is the reason why people invest in these things, because the financial system as a whole is catered to upwards price trajectory. And this is fueled by GDP. This is fueled by our fiat going to zero slowly. And this is also fueled by the debt system that we currently have. So that's the main reason why you need to know why exactly people invest. It's not to gain dollars, it's actually to keep your purchasing power. That is the main core principle of investing. If you can understand that, you will be able to understand why we're doing what we're doing in financial markets and why exactly they behave the way they do. Because the core tenet is to keep purchasing power. Now, within that, if you understand that the core tenet is to keep purchasing power, you'll see that the financial markets is actually merely a reflection of the devaluation of the currency that we use, of the dollar. It actually isn't necessarily something going up. It's more so the dollar itself getting devalued. Yes, of course you have, things like people jumping into stocks and actually making the value of a stock higher. Things can become overvalued relative to the fiat currency that we use. But if you understand that the financial markets is merely a reflection of the devaluation of the dollar, everything will become more clear to you as to why it looks the way it does. This is your purchasing power over the last 100 years. Very simple. 1896 to 2025. That's your purchasing power. So $45,000 DJI. This is a very, very simple, too simplified of a way of explaining it, because there are a lot more nuances to this, but just to the average investor and to the new investor, this is the way you can think of it. $33 in 1896 is equivalent to $45,000 today. $45,000 today, $35 in 1896. You can clearly see the disparity over the last 150 years. Your purchasing power has gone to nearly zero. Actually, as a matter of fact, what is incredible about this is that the DXY itself, this is what we use to track the dollar. And this is why I say it's more nuanced than we think, because the financial market is very nuanced. But this is a DXY. You think to yourself, oh no, the DXY over the 70s has stayed flat. No. The DXY over the last 30 to 40, 50 years has not stayed flat, which is the dollar. The dollar has not stayed flat. The dollar has went down a lot. It has gone down relative to the stock market, so much so that you would think that it was a sick joke. You would think that, no. My purchasing, no. You are getting cooked. You are getting absolutely finessed out of your mind, and you don't even understand what is happening. So that's why I wanted to show you the full history so we can understand the next portion. Okay, so I'm going to go to Bitcoin, show you why exactly people invest in this. I'm also going to tell you what I think is going to happen in the future, and then we're going to get into our Cardano price prediction at the very end. Okay, and so now we're going into Bitcoin. What do you see? 2011, $8, $125,000 now. What do you think is happening? Remember, when you understand that the financial system is merely a reflection of the devaluation of the dollar, everything becomes more clear. Everything is just a mirror. This chart, these candlesticks are just a mirror of what is happening to your dollar. This is a reflection of what is happening to your dollar. It is going down, down, down. You can just think of this as like an inverted chart. Imagine this was going down. Imagine this chart was going down, less and less purchasing power, because it is a reflection of the devaluation of the dollar. So now we can get into the full-on technical analysis now, because that was what I wanted to get out of the way. And I think that was the core principle of investing. Investing is actually just about keeping your purchasing power. Yes, you can gain against something. That's when we're getting into real and nominal. But for now, I just want to let you guys know that is the very core principle of investing, is to keep your purchasing power. You understand that? I believe that you guys will be very good investors in the future. Okay? We got the 18.6 year cycle out of the way. And we also have the core principle of investing out of the way. So now we can get into the charts. Now we can understand the price action. So I just want to give you guys a kind of like a brief history of the very beginning of Bitcoin's bull market in the last 4 year cycle, just so you can understand the short term a little bit better. Okay. And so I would consider the very beginning of this bull market was right around March 2023. This was the first higher high that we saw after this very long downtrend. It was about a year of a downtrend, and then boom, we had our very first higher high. This was around March 2023, and this downtrend was spanning from November 2021. This was the FTX collapse all the way down. We had SEC, we had Gary Gensler, all this bull crap was kept coming out, and everyone hated Bitcoin, everyone hated crypto so much, but this was the very first higher high. Okay, so that's what I would consider this was the beginning of the bull market. So now we have that out of the way. We can clearly see, okay, October 2023. And I'm going to cross-reference this with the Cardano chart in a little bit, October 2023. But I want to show you guys this really quick. We are currently in October of a post-halving year. The percentage of Bitcoin went up about 28%. I'm not saying that we're going to go up 28% this month, but if we're just going off of historical patterns, I would expect from the very beginning of the candle, probably around maybe 14, 15%. That can lead us to around 132,000. I'm going to take a fave extension and also cross-reference this later on, but I want to show you guys that as well. After October, we get November, December, February, leading up all the way to 74,000 Bitcoin. This was the retest of the all-time highs. Then we had a almost an 8 to 9 month long consolidation. Then we had a price explosion in November, leading to a $110,000 peak on Bitcoin, followed by the tariff collapse. So I do the entirety of the price action on the monthly and on the macro for emphasis to understand the short-term price swings a lot easier. And when you understand the macro, when you zoom out, you can understand, wow, we are in an uptrend. What happens normally in an uptrend? What do you think happens in an uptrend? Okay, so that's the reason why I want to zoom out to show you guys. I think that new investors and new traders, they think about the short term too much. I think it's very, very prudent to understand the long term, to understand the short term. That's the only way you can understand the short term, is actually through the long term. So anyways, zooming in, let's just go to the daily chart. August peak, 124. Lows, September 2025, lower high, but it was a higher low. This was a very, very pivotal point. This was the higher low structure that we had. And this is what I mentioned previously in our Instagram page, a brief analysis of why I believe that if this was the higher low structure, we would have pumped to around 120,000 because we were leading to October. This is where we are, guys. This is where we are right now. We're at 123,000. And want to know where the sentiment is at $123,000 on Bitcoin? Try to guess what the sentiment is. It's at neutral. The sentiment on Bitcoin at 123,000 is neutral. Again, that's the reason why I want to zoom out. Because every single time people get scared and they get bearish and they say, oh my gosh, look it, we dropped. Zoom out, guys. Look at the long term and you understand the short term. So right now I'm going to draw a very quick fib extension just to give my short-term price projection. And then we're gonna get into some exchange volume things to cross-reference this thesis. So swing low to swing high. The 1.618 is sitting right around $136,000. I would not be surprised if we reached $130,000 range within the next month or two, maybe possibly even within the next week. You zoom out, 2023, price explosion. October, okay. October 2024 was a little bit of less of a price explosion, but we're in the post-halving year. So let's just take November as more of the example. So November, price explosion. Again, around 38%. Bitcoin right now sitting at 123,000. We haven't even barely began this monthly candle. We're sitting around right around 10%. I believe this candle can end around up 15 to 16%, which would lead us right around the Fibonacci extension of about right below that 1.618. That's where I think Bitcoin can end on it by the end of October. So with this being said, I want to show you guys ADA's chart. A lot of people hate ADA with a burning passion. They hate it so much. They think that it's the worst coin they've ever seen. They just think it's like, wow, they just hate it so much. But I want to show you two things. I'm going to show you guys two things. Monthly chart on ADA. Something very peculiar happened right around this time, October 2023, on ADA's price. ADA was right around 26 cents. It was the very, very bottom sentiment. It was the lowest of the low. It couldn't have been lower. Okay, but guess what? ADA began its first price explosion. 40% roughly. From October to the beginning of November. I think, my personal opinion, remember, my analysis is that we're going to reach that 1.618 on Bitcoin. Right around $132,000. If that is the case, I believe that ADA is going to reach around $1.20. And even higher, maybe even $1.60. Because you can clearly see the patterns. The patterns are playing out right in front of your eyes. That's why I think TA is a lot more easy when you zoom out. The pattern is playing out right in front of your eyes. There's not much more explaining to do other than understanding that we are in a broader rounding bottom on ADA. And the moment we break out of this long-term downtrend we've been in ever since 2021, this $3 downtrend, you can clearly see we've been wicking off of this downtrend for months. And I have these supply zones marked out right around 71, 70 cents. We haven't reached that level yet, guys. I would venture to say that ADA is one of the most bullish positions it's been in in a very, very long time. But the sentiment could not be lower. This is a very great trade. I believe that it has great risk to reward, and I think that it's going to melt faces. And so going down back to something I wanted to cross-reference with Ethereum, I want to show you guys something very quickly about Ethereum. Remember when Ethereum was at 1,600 in April? How fast did the price move up? And this is Ethereum, right? This is a larger market cap token than Cardano even. Ethereum went up around 170% in 5 to 6 months. With that being said, things can move a lot faster than you think. This was a 5 to 6 month swing on Ethereum. This was 100%. For projecting that on ADA, I believe next swing would lead us to around $2.40. That is a conservative price target as well. $2.40 is a very conservative price target for ADA because Ethereum itself did 180% from the bottom to the top. And I think ADA's sentiment is the same sentiment as Ethereum at 1,600. That's why I'm referencing this price with 180% with ADA's. That's the reason why I'm doing that. So with that being said, I want to end the video off with a couple of fundamental indicators that I've been tracking. So the first one is daily exchange volume. If we zoom in to right around the year-to-date chart, you can see that the daily exchange volume is actually on the verge of a breakout. The last time the daily exchange volume broke out, this was when ADA actually had its upwards price trajectory to around $1. So if we break out again, I would assume that it will be a lot easier for us to reach that $1.20 target. And we also have a lot more room than you would think to go. Right now, we're actually at 68 billion for the daily exchange volume. The peak in 2021 was at 150 billion. So if we even get near to around, let's just say 80 to 90 billion, I believe ADA will be right around $1.20, $1.40, and altcoins are going to explode. And everything's going to explode so fast. So next thing, I'm going to show you something. Poly market odds. We are right around 93% chance of a Cardano ETF in 2025. How great is that? 93%. That's just another fundamental indicator that I've been tracking. Sometimes it can happen sooner, it can happen later, but right around, we're sitting at right around 93%, which is very, very bullish. Another indicator I want to track is USDT dominance. USDT dominance is sitting right around 4.28%. When Bitcoin was at 107, okay, right around this range, USDT dominance was sitting around 4.7%. I'm going to zoom out again. This is the daily chart. We can clearly see USDT dominance is in a clear downtrend. I actually drew this channel, broke out of the channel, but right now we're still clearly in a clear downtrend. I'm expecting USDT dominance to reach right around, at least retest this level at right around 3.98%. I mean, a retest of this level would most likely lead Bitcoin to right around 130,000 and ADA to right around $120, $1.20, $1.40, ETH probably 5,500 to 6,000, right? And so that's just stablecoin dominance. Right now, Bitcoin dominance is still, kind of on the uptrend. So if Bitcoin dominance can stay at least here, what I want to see Bitcoin dominance do is not break above this macro trend line I drew on the daily chart, because that would indicate a break of structure back into the bullish territory on 61%. I actually want to see a breakdown and a retest on Bitcoin dominance's chart of this trend line, and then we break down further. That is what I'm currently tracking on Bitcoin dominance. So far, this is what's happening. It hasn't necessarily been able to get above. If we can just stay below here, that would be absolutely great for altcoins, and that would be absolutely great for your bags, okay? And so that's what I'm tracking. In terms of the total three, we're sitting at right around 1.16 trillion. So right now with this monthly candle on total three, if we can, right now we're actually breaking out currently. So I'm not expecting any pullbacks from here, guys. I actually think that total 3 most likely going to reach 1.3 trillion sooner rather than later. Total 3 actually is having its first monthly candle above all of these wicks. Before, we weren't able to finish monthly candles above the 1.08 trillion mark. But now that we're sitting at 1.16 trillion and this is a new monthly candle with 22 days left, guys, this is the most bullish I've ever seen the chart of total 3. Remember, guys, remember the Dow Jones. You never know. What I like to say before, you know, technology, real estate, gold, those have always been the best investments so far in all financial markets and all financial history. Technology, real estate, gold, and industrials have always been the best investments. So we'll see. We'll see if cryptocurrency is that new technology that kind of leads us to that 4 trillion sort of market cap. I mean, it's very possible. Gold is at a $16 trillion market cap. Real estate is at $200 trillion market cap. Bitcoin is at $2.5 trillion market cap. And you understand that fiat currency is asymptotically going to zero. A $4 trillion total 3 or $4 trillion cryptocurrency market or altcoin market is not out of the question. That is very reasonable. That is very, very understandably reasonable when you zoom out and you understand the global financial markets and the global financial trend. Okay, boom. So with that being said, guys, that's kind of, I just want to wrap up the video a little bit. I'm extremely bullish on ADA. I still maintain my bullish outlook. I still think it's going to reach right around $1.10, $1.20, $1.40 within the next month or so. We have the Cardano ETFs coming out. We have total 3 on the breakout. We have Bitcoin at $123,000. Every single thing is lining up for this trade to play out. Ethereum is at 4,500. I mean, we're good to go, guys. We are good to go. It is going to pump so hard that you thought that something bad happened to you. The global financial markets is in a broad macro uptrend, guys. Nothing seems unreasonable at this point. I mean, it actually seems more reasonable that the market would continue upward than it to go down. Because if it starts to go down from here, we're in a bigger problem than people would actually like to admit. And so what my assumption is that we're just going to keep this party going. So without further ado, like and subscribe. Make sure to subscribe to our Patreon. Make sure to check out our Discord. When you subscribe to the Patreon, you get the main chat, the educational videos, the trade entries and exits, the weekly report, and our trade ideas. Make sure if you're in the Discord to check out the new weekly macro crypto economic report that I posted on the Discord. And without further ado, I'm going to sign off. I'll see you guys later.